we certainly are in a period of inflation. We're seeing that in the US, seeing it in Canada. That's undeniable at this point. And I think often at those times, in those periods of inflation, people will run to the precious metals, gold and silver, to have a physical asset.
When is inflation going to impact like the gold price?
Welcome to Silver Heist. Thank you to our returning subscribers and guests. We are a channel that likes to hold physical gold and silver. To support my creation, please subscribe.
Well, I'd like to thank GoldMining Incorporated for sponsoring this video and making the CEO, Mr. Alastair Still, available for this call. Mr. Still is a 25-year veteran of the gold mining industry. Mr. Still, thanks for joining us. Welcome to the show.
Thanks for having me. A pleasure to be here today.
Great. So, Mr. Still, during your career, can you let us know what countries you visited in your pursuit of gold and other metals?
Yeah, absolutely. I've had the fortunate of working almost the first 25 years of my career working for major producing companies such as Newmont and Goldcorp. And prior to that, it was Placer Dome and Kinross. So several major producing companies. Most of my time has been spent in Canada, although I've traveled globally looking at projects. And I was working in South America for 3.5 years. I was based in Argentina while I was the project director building a major underground gold mine in the southern part of Patagonia. So that was a good experience overseas as well. So mainly in Canada, but toured pretty much all over the world looking at projects.
Great. And so do you speak either French, Spanish, or Portuguese?
Well, I went through high school with French, and that carried me through a lot of places in Canada. And I did pick up Spanish while I was in Argentina, but that's probably getting rusty. It's been a couple of years since I've been there now, but enough to get by, that's for sure.
And so you're a geologist. So what's the deepest you've been in an underground mine?
The deepest I've been, well, that's an interesting question. Probably I started my career working at the Macassa mine in Kirkland Lake in Northern Ontario. And at that time, the shaft there was the deepest single lift hoist in North America, and it went down over 7,000 feet. So I worked as a geologist underground there, and it was a pretty warm underground mine at those depths.
Okay, great. Wow. Inflation news in the United States, it's an ongoing and it's not transitory. How has inflation impacted the gold sector the last couple of years? When is inflation going to impact like the gold price?
Well, it's a question we get asked a lot. And I think like many things, the people try and make a correlation, positive one way or positive another. And we certainly are in a period of inflation. We're seeing that in the US, seeing it in Canada, seeing it around. That's undeniable at this point. And I think often at those times, in those periods of inflation, people will run to the precious metals, gold and silver, to have a physical asset. And I think that's still very much the case here. So while there may be some volatility in the price of the metals, there may be a little bit of chop, I think the fundamentals are still solid for a higher price going forward.
And so how is the mining industry, specifically gold, fared during this COVID period in terms of profits, budgets, and health of the sector?
That's a great question. And I think as much as any industry, I think the mining industry and gold in particular has fared quite well. I think it's fared well because many of the producing companies are just extremely efficient operators. They have some of the most stringent health and safety practices of any business in the world. So they have great safety programs. They've been able to keep their workers safe. They, for the most part, have been able to keep their operations going. And I think this is somewhat of a relic as well from the last 10 years when there's a lot more emphasis on the producing companies to turn a profit and to be able to produce dividends for their shareholders. And that made the operators, better operators, more efficient. And, say 5 or 10 years ago, that profitability came at the expense of exploration. They would often trim out their exploration budgets to try and show a profit. And now they're playing a catch-up game. Now they have to pay it forward and put the money into exploration now. So there's a lag. They haven't been keeping up reserves with what they've been mining. So that makes projects such as we have in our portfolio that much more sought after as the majors and the producers try and replace what they have been mining for the last several years.
I recently saw a press release regarding a preliminary economic assessment for your Colombia project named La Mina. Can you share some of the highlights of that property and the recent news?
Yeah, absolutely. So this was an important step for us, and we've been moving forward to try and add, foundational development and foundational engineering studies and work on our projects. And La Mina is the first PEA that we've announced. And the preliminary economic assessment essentially took a resource that we updated earlier in 2021 and crafted a mine plan around it. And we see a healthy mine plan there that'll produce over 1 million gold equivalent ounces. There is some copper components that are produced from the mine there, a little bit of silver as well. And it's producing over 100,000 gold equivalent ounces per year on a 10-year mine life on a pretty attractive economic basis as well. We're very excited by that, but really for us, it's really more of a stepping stone to see what we can do next. And we're very excited by some of the targets we have on the property that, particularly highlighting La Garrucha, which is immediately adjacent to it, which is a great target, which we'd hope to be drilling. We hope to be drilling later this year. We can try and add to the resources and build upon that foundational economic study.
So what was the strategy behind the selection of your different projects, and what are some of the common characteristics that they share, and what's that made them attractive to buy in the first place?
Well, I've been working at GoldMining now for a little over a year, and I would say that our founder, Amir Adnani, has done an exceptional job over the last 10 years of acquiring assets at opportune moments. So he's bought assets at the right time, when may have been a dip in the price or a company may have been struggling to find financing. He's come in and put together this incredible portfolio. One of the characteristics that the projects have is they're all in the Americas. So they're all central mining jurisdictions and mining familiar areas or mining friendly areas. And there's also a very sizable resource base on them. Like, unlike any of our peers, our total resource base is over 16 million ounces gold equivalent measured indicated, another 16 million ounces in the inferred gold equivalent category. So these projects have collectively made a world-class portfolio of primarily gold, but also some exposure to copper and silver as well in that portfolio. And a lot of our projects have sizable resources. Helps make us unique, is that we're not a one-trick pony here. We've got at least 11 projects that have resources on them, and again, they're all in the Americas.
Yeah. So, what are some of the benefits of a company with multiple projects versus a single project company?
Well, I think the most clear is that you get some diversification, and you're able to spread your risk around as well. It's not betting it on one operation, and it also lets us give us the optionality to focus where we want our efforts. We're obviously not going to work all of our projects, but we can pick the best ones, pick the ones with the best return, and focus on those areas to get the best returns for our shareholders. The other thing it does too is that because the geological properties of deposits are all different deposits have different metals. And although we're gold based, we do have a significant component of copper. There's some 2.7 billion pounds of copper on our projects. And those aren't primary copper projects. This is copper that would occur as a byproduct with our gold. And that's very attractive to a lot of companies who are looking for development assets that have diversification in the metal as well. And as much as copper is important, we also have probably a less significant portion of silver, but there's still almost 27 million ounces of silver in our resources as well to complement our primary gold assets.
If I was armed with your property list and GoldMining Incorporated never existed, if I went investing in 2022, what would be different for me in trying to create the same portfolio?
Well, I think the simple answer is you wouldn't be able to replicate that portfolio. Those assets are not available today. And this is because of these very opportune purchases that GoldMining has made over the last years at the right times, has put this portfolio together. To assemble such a portfolio today with some 32 million gold equivalent ounces, you couldn't do it. And you couldn't do it anywhere near the amount of money that our market cap is at. And that's, I think, one of the great opportunities, is that we are highly undervalued on an enterprise value per resource basis. We're getting traded at less than $5 an ounce. And to calculate that, I'm taking off from the enterprise value. We've crystallized over $100 million onto our balance sheet by the spin out to create Gold Royalty Corp. And we currently own 20 million shares of that company, which is trading close to $5 per share right now. So that's on our balance sheet as well. That gives us some additional stability that a company trying to acquire assets simply wouldn't have on their balance sheet.
So you spun off a company called Gold Royalty, which has since gone on to expand its royalty properties and merge with other companies. But you've held on to 20 million shares, which is worth upwards of $90 million US dollars. So how does that ownership stake benefit GoldMining Incorporated shareholders now and in the future?
Well, I think it's a great question. I think the first thing I would like to point out is that when we did that spin out, we wrote small royalties on our assets and created Gold Royalty. The market jumped all over that. It had to upsize itself twice on the IPO. It raised $90 million. The first thing I think that shows, it's a validation of the assets that created that company, which are the gold mining assets. The second thing is we're the largest shareholder in that company now. With these 20 million shares, we stand to benefit from this growth that Gold Royalty is demonstrating. And they've done that already. They've acquired Ely Gold royalties. They've just done a recent transaction to acquire Abitibi royalties in Golden Valley. So what started out with as an IPO last year, today is a market cap somewhere near $600 million in less than a year. It's a tremendous growth story. Our shareholders have exposure to that, to the 20 million shares. And the other benefit it gives us, of course, is having those shares on our balance sheet puts us in a position that juniors in our space just simply don't have. It gives us the flexibility to withstand, downturns in the market that might come with a price fluctuation. Having this block there also was key for us being able to create a margin loan. We have a $20 million facility just arranged with the Bank of Montreal last year that gives us access to cash and capital as well. That having this balance sheet, gives us. And again, this is unheard of for a junior our size to have these levers at our fingertips, these options that we have available to us.
So I'm displaying a table of uranium prices in 2021. This is an illustration of the power of investing in the commodity versus a company that is mining or providing services to the industry. So the uranium price is up 39% in 2021. Compare that to two companies that were started by the same person who founded GoldMining Incorporated, Mr. Amir Adnani. So Uranium Corp is up over 100%, while in the past year, Uranium Royalty is up 250%. Can you explain the benefits and risk in owning a gold mine stock compared to owning the physical metal itself?
Absolutely. It's a great question. And I think certainly by having a large resource base that we have with 32 million ounces gold equivalent gives us great leverage to the gold price. And I'll turn that into a simple analogy and how I envision it. And if we look at the valuation that we receive right now on an enterprise value per gold resource ounce, and take out the value of our Gold Royalty shares, we're valued at something under $5 per ounce. If we try to track with the price of gold, you might move up a few dollars. But as we track with the price of metals and as we advance our projects, I think our peer group comparables, and you can pick a basket of companies to compare us to, and they range anywhere from $20 to $50 per ounce on a comparable basis. So you look at the multiples that you can gain by trying to re-rate with a higher price increase is completely, off scale compared to where a few dollars price movement can be. So small price movement can have a huge impact on us in terms of getting a re-rate and a valuation driver for our shareholders. It's also an interesting point to make is that although we're a gold primary commodity is gold in our portfolio, we also have a uranium property in our portfolio as well that not a lot of people know about. It's our Rhea project, which is it's based in the Athabasca Basin, which is home to some of the highest grade uranium deposits in the world. The average grades that are produced there are some 100 times the global average, so it's a great spot to be in. We have a very large land package there, 125,000 hectares. And if you look at comparable junior companies, much smaller land areas, much less prospective. And just because they're in the uranium space, they're trading at $50 or $100 million market caps. So I think that's an interesting piece in our portfolio. You brought up the uranium angle, and that's something that, hey, we may try and unlock the value on something that's non-core to us as a gold mining company, but certainly can create a lot of value for our shareholders if it's moved forward.
So what steps has the company taken and what steps are you about to take to unlock value from some of your gold properties?
Okay, that's a great question. I think it started last year with our foundational work on our reserves and resources. And although we don't have reserves at this point, we thought it was fundamental to our growth to attack our resources, make sure they were solid, make sure they were valid. And that's certainly from me, having worked for major producing companies, resources are foundational to all we do. So we updated resources on material properties, and those resource updates accounted for about 75% of the total resources in the portfolio. So we made those more solid. We validated those resources as a first step. From those resources, we've taken some highlighted projects and we're advancing on the preliminary economic assessments. We touched on earlier, the first of those that was announced, the La Mina project in Colombia. We have a second PEA we're getting excited about is our San Jorge project in Brazil. It's a great project, close to infrastructure, a high-grade open pit resource. That's one we're moving forward to. So I think it's important that we look at these things in stages. We validated resources, we're demonstrating value in the economics of the PEA. And the third piece of this is, of course, the value that we showed by creating a company like Gold Royalty. How can we replicate that within our portfolio? Maybe we spin out the uranium assets we just talked about, or maybe there's a project in our pipeline that can be creating more value by doing a similar spin out transaction, put it in the hands of someone else or a JV with someone else, where we're able to grow and see a much more impactful return in the short term for our shareholders.
So your company is listed on the New York Stock Exchange and is one of the holdings of the GDX Junior Mining ETF, which is both unique for junior mining companies. So who are some of your individual or institutional investors in GoldMining Incorporated?
Yeah, it's a good question, and we did get that listing late in 2020 on the GDXJ and the NYSE American listing. We have a dual listing. We're also listed in Canada. Easy ticker symbol to remember there, GOLD. So that's a good one to remember. But I think what's important there is we have some well-known institutional investors who have put money into us, but we also have some good analyst coverage now. There's 4 firms who do good research on us. Your followers can look at those reports. We have H.C. Wainwright, Roth, Haywood, and Laurentian Bank all providing coverage on us and some good analysis on our assets. So I would also steer your followers to check out those third-party evaluations on our stock and see what their views on the assets are as well.
How can people stay in touch with some of your news releases going forward?
Great question. There's a simple subscription one can make just by clicking on our website. Put your name and email address there, and we will send you all the updates as we go forward and have you on our subscription list.
Mr. Still, is there anything else you'd like to add?
No, I think just, to highlight one more time, I think what a unique opportunity gold mining presents and having exposure to, physical metal by the sheer size of our inventory of over 32 million gold equivalent ounces, and the added strength of having a strong balance sheet, over $100 million in liquid assets on our balance sheet, led by a highly experienced management team.
So, Mr. Still, I appreciate you joining us today to field our questions. Thank you for your time. Hope to talk to you again down the road.
Pleasure being here. Look forward to speaking again in the future.